What if the biggest advantage in a casino has nothing to do with luck, intelligence, or how much money you bring with you? What if the real advantage belongs to the side that can afford to wait? You might walk into a casino with a small amount of money and walk out with several times more. You might even have an incredible night and believe you have discovered a system that finally allows you to beat the house. But the longer you continue playing, the more dangerous the situation becomes. Because the casino doesn't need you to lose every hand. It doesn't need to take all your money tonight. It simply needs you to keep playing while the mathematics remains on its side. And the most dangerous part of gambling isn't always the first loss. It's what happens inside your mind after that loss. Gambling can turn money into excitement, excitement into hope, hope into obsession, and eventually obsession into desperation. A person can begin by gambling for entertainment and end up gambling because they feel they have no other way to recover their life. Today, we're going to decode what really happens inside the mind of a gambler, why people continue playing even when they know they're losing, why wealthy people can become trapped just as easily as ordinary workers, and why the phrase, "I'll win it back," can become one of the most expensive thoughts a person ever has. Let's begin with a simple truth that many people understand intellectually, but fail to appreciate emotionally. A casino does not need to win every game. In fact, the casino expects players to win sometimes. That's part of the experience. If every player lost immediately, most people would stop coming back. A casino needs winners because winning creates excitement, and excitement creates memories. The person who loses $50 and goes home disappointed may never return, but the person who walks in with $100, turns it into $500, and leaves feeling like they have discovered something special may come back next weekend. The occasional win doesn't destroy the casino's business model. It can actually strengthen it. The fundamental advantage comes from the mathematical structure of the games. Every game is designed so that over a large enough number of plays, the house has an expected advantage. That advantage might appear small during an individual session, but repeated enough times, it becomes powerful. Imagine a tiny leak in a bucket. 1 minute doesn't matter. 1 hour might not matter. But leave the bucket under the leak long enough, and eventually, the water is gone. Gambling works in a similar way. A small mathematical disadvantage repeated again and again can become a substantial financial loss. This is why the question isn't simply, can you win at gambling? Of course you can. The better question is, can you consistently overcome the mathematical advantage over a long period of time? And for the ordinary player, the answer is no. You might have a lucky night, you might make a brilliant decision, you might experience a winning streak that feels almost impossible. But a short-term result is not the same thing as a sustainable financial strategy. The stock market can also produce enormous short-term gains and losses, but investing in productive assets is fundamentally different from repeatedly paying to participate in a game designed with a house advantage. One approach can create ownership and potential long-term value. The other is structured around repeated wagers where the house has an edge. Understanding this distinction is critical if your goal is financial freedom. Almost nobody begins gambling by saying, "I want to destroy my savings." That's not how the story usually starts. It often begins with something that sounds completely harmless. Someone visits a casino while traveling. Someone joins friends for a night out. Someone places a small sports bet. Someone plays a few hands of cards online. They tell themselves, "I'm only doing this for fun. I'm only spending money I can afford to lose. I'll stop after a little while." At this stage, the person usually believes they are in complete control, and sometimes they are. They may gamble a small amount, enjoy the excitement, lose what they plan to lose, and walk away. The danger begins when the experience creates an emotional reward that is much stronger than the amount of money involved. Imagine someone walks into a casino with $50. Within a short time, that $50 becomes $200. Suddenly, something interesting happens inside the brain. The person doesn't simply remember that they made $150. They remember the feeling, the excitement, the surprise, the moment when the outcome went in their favor. They remember how quickly money appeared. And that experience can create a powerful mental reference point. Instead of thinking, "I spent $50 on entertainment," they may start thinking, "I turned $50 into $200. That sounds like a small difference in language, but psychologically, it is enormous. The person has now experienced the possibility of money arriving quickly without the usual connection between time, labor, skill, and income. This is one of the reasons gambling can distort a person's perception of money. In ordinary life, most people understand that earning money requires time. You work for hours. You develop skills, you build a business, you serve customers, you create products, you invest capital, you wait for results. Wealth generally takes time to build. Gambling compresses the emotional experience of money into a few seconds or minutes. A person can win an amount that would normally require weeks or months of work, and once the brain experiences that, ordinary income can suddenly feel painfully slow. The person begins comparing a normal paycheck with the possibility of a huge gambling win. The comparison is unfair because it ignores risk, probability, and sustainability. But emotionally, the comparison can still feel real. Then comes the first major psychological shift. The person returns to gamble again, not because they need the money, but because they remember the feeling. Perhaps they win again. Maybe they lose. Maybe they experience another large win after a loss. Now their confidence begins to grow. They start thinking, maybe I'm actually good at this. Maybe I understand the game. Maybe I have a strategy. This is where gambling can create an illusion of control. Random outcomes begin to look meaningful. A player sees a sequence of results and believes there must be a hidden pattern. They begin tracking previous outcomes. They start believing that certain numbers, cards, colors, or patterns are due. They may tell themselves that a losing streak cannot continue forever, or that a winning streak is a sign that their luck has changed. But random events don't remember what happened before. A coin doesn't know how many times it landed on heads. The next result doesn't owe you anything because you lost the previous result. This misunderstanding is extremely important because humans are naturally uncomfortable with randomness. Our brains are built to search for patterns. Pattern recognition is useful when you're trying to understand the world, but it can become dangerous when we apply it to genuinely random events. If you flip a coin and it lands on heads several times, your brain may immediately feel that tails must be coming, but probability doesn't work that way. The next flip doesn't become more likely to be tails simply because heads appeared before. The same principle applies to many gambling situations. A previous loss doesn't make your next bet more likely to win. A previous win doesn't guarantee that another win is coming. But emotionally, gamblers can experience random sequences as if they were messages. Then comes the most dangerous phrase in gambling: I'll get it back. At first, the loss may be small. Perhaps someone loses $100. They think, it's fine, I'll win it back. Then they lose another $200. I'll get it back. Then another $500. I'm already down this much, so I can't stop now. Notice what has happened. The goal has changed. The person is no longer gambling because they enjoy the game. They are gambling because they want to erase the emotional pain of the previous loss. Gambling has transformed from entertainment into recovery. This is called chasing losses, and it can become a financial nightmare. Imagine you lose $1,000. A rational response might be to accept the loss and stop, but the emotional response is often very different. The gambler thinks, if I can just make another $1,000, I'll be back where I started. So they take another risk. They lose again. Now the loss is larger. The emotional pressure becomes stronger. The person begins thinking, I can't leave now, because then all of this will be permanent. They increase their bet because the original amount is no longer enough to make a meaningful difference. And this creates a vicious cycle. The larger the loss becomes, the larger the next bet needs to be. And the larger the next bet becomes, the greater the potential loss. At this point, something else begins to happen. The gambler starts changing the meaning of money. $1,000 is no longer seen as $1,000. It becomes one step closer to getting even. $10,000 is no longer $10,000. It becomes the amount I need to recover. This psychological transformation is incredibly dangerous because it makes increasingly large risks feel reasonable. The person is no longer asking, would I normally risk this much money? Instead, they're asking, what do I need to do to get back to where I was? And those are completely different questions. Loss aversion makes this even stronger. Humans generally feel the pain of losing money more intensely than the pleasure of gaining the same amount. Losing $500 can emotionally hurt more than gaining $500 feels satisfying. A gambler who is down $10,000 may therefore become irrationally determined to recover it. They may reject the idea of walking away because accepting the loss feels unbearable, but the money is already gone. The next bet doesn't change that fact. It simply creates a new risk. Now imagine a person who has spent years working hard to build a financial cushion. They save money every month. They avoid unnecessary debt. They slowly build investments. Then they discover gambling. At first, it feels separate from their financial life. It's entertainment. But after several wins, they begin taking larger risks. Eventually, one night goes badly. They lose a large amount. Suddenly, they look at their savings differently. Instead of seeing their savings as protection for their future, they see it as ammunition for recovery. They think, I have enough savings to make one serious attempt. That is the moment when financial security can begin turning into financial danger. The person may tell themselves that using savings to recover losses is logical, but it isn't. Savings were accumulated through disciplined behavior. Gambling uses uncertainty to try to multiply money quickly. One protects your future, the other puts your future at risk. The gambler may believe they are solving a financial problem, but they are actually exposing the remaining assets to the same mechanism that caused the original loss. And then comes another psychological trap. The gambler remembers the times they recovered. Maybe they lost $2,000 once and later won it back. Maybe they were down $5,000 and managed to finish the night ahead. Those experiences become extremely powerful memories. When a new loss happens, the brain retrieves those memories and says, "You've done this before." The gambler forgets an important detail. Recovering a loss once doesn't prove that recovery is a reliable strategy. It only proves that it happened once. This is how experience can become dangerous. Every successful recovery creates confidence in the idea that another recovery is possible. Every lucky escape becomes evidence supporting the gambler's belief. Eventually, the gambler can build an entire personal mythology around their ability to recover. They may believe they have a special instinct. They may believe they know when to increase the bet. They may believe they can sense momentum. But the more confident they become, the more money they may be willing to risk. Now let's talk about wealthy gamblers, because there is a common misconception that gambling is primarily a problem for poor people. It isn't. Money changes the size of the consequences, but it doesn't automatically protect someone from addictive behavior. A wealthy individual may lose amounts that would be unimaginable to an ordinary worker and still continue playing. Sometimes the motivation isn't even money, it's excitement. Imagine someone who already owns multiple homes, expensive cars, businesses, investments, and everything else they could reasonably want. What can money still provide? More luxury, certainly. But after a certain point, another expensive watch or another car may not create much emotional excitement. Gambling can create something different: uncertainty, tension, anticipation, a rapid emotional swing between winning and losing. For someone who has become accustomed to luxury, that emotional intensity can become addictive. This is why you should never assume that a person is safe from gambling simply because they can afford to lose money. The problem isn't only the amount lost, it's the relationship between the person and the activity. A wealthy gambler might not experience financial ruin immediately, but they can still damage relationships, businesses, trust, decision-making, and mental well-being. And if the gambling escalates far enough, even enormous wealth can eventually become insufficient. Another important factor is the environment surrounding gambling. Modern casinos are not simply rooms filled with tables and machines. They are carefully designed entertainment environments. Luxury hotels, restaurants, music, lighting, VIP treatment, rewards programs, private rooms, transportation, exclusive services, and constant stimulation all contribute to the experience. The goal isn't necessarily to make someone lose everything in one night. The goal is to create an environment where customers stay engaged and return. In gambling, that repeated engagement has a direct financial consequence because every additional wager gives the house another opportunity to benefit from its mathematical advantage. Think about how different the experience is from ordinary spending. If you buy a meal, the transaction ends when you finish eating. If you buy a television, you take it home and own something useful. If you buy a book, you receive information. Gambling is different because the transaction can repeat over and over again. One decision creates another decision. One bet creates another bet. One win encourages another attempt. One loss creates another opportunity to recover. The cycle itself becomes the product. Online gambling can make this even more dangerous because physical barriers disappear. You don't need to travel anywhere. You don't need to walk into a casino. You may not even need to handle physical cash. A phone can place the entire experience inside your pocket. Money can move from your bank account into a betting account almost instantly. The emotional distance between clicking a button and losing money becomes incredibly small, and when the activity is available around the clock, the opportunity to continue never really disappears. This changes the psychology of gambling. In a physical casino, at some point you may have to leave the building. You may run out of cash. You may feel embarrassed about returning. Online, those natural stopping points can disappear. A person can be sitting alone in their bedroom late at night, continuing to place bets because they believe the next one will fix the previous one. And this brings us to another powerful psychological phenomenon, the illusion of the near win. Imagine a player misses a winning outcome by a tiny margin. Emotionally, the brain may interpret that as being close. But mathematically, a near miss isn't necessarily closer to a win than any other loss. Yet psychologically, it can create motivation to try again. The person thinks, I almost had it, and almost becomes a reason to continue. The same thing happens when someone loses after making what they believe was a smart decision. Instead of thinking, the outcome was unfavorable, they may think, I was so close. The emotional brain interprets the loss as evidence that success is within reach. That can make another bet feel justified. Another powerful trap is the sunk cost effect. Imagine you've already lost a significant amount of money. You know you should stop, but then you think, I've already lost this much. I can't walk away now. This is a psychological mistake. Money that is already gone should not determine whether you take a new risk. The only rational question is whether the next decision makes sense based on the future, not whether it can repair the past. Yet gamblers often do the opposite. The more they lose, the more committed they become to recovering it. It's like watching someone dig a hole and deciding that because the hole is already deep, they should dig even deeper. But deeper isn't a strategy. It's simply more exposure. This is where gambling begins affecting identity. A person may start hiding their losses from family. They may lie about where money went. They may tell friends they are doing fine when they aren't. They may avoid opening bank statements. They may borrow money while claiming it is for something else. The secrecy itself creates another problem. Once the gambler has lied about the situation, admitting the truth becomes emotionally harder. So they continue gambling in an attempt to solve the problem before anyone finds out. Now imagine how this affects a family. A spouse may notice money disappearing. Bills may be delayed. Savings may suddenly shrink. Arguments become more frequent. Trust begins to disappear. Parents may lend money because they believe their child is facing a temporary problem. Friends may help because they believe the person is simply unlucky. But if the underlying behavior hasn't changed, the money can disappear again. The tragedy is that gambling doesn't only consume money, it consumes attention. A person may be physically present at dinner, but mentally thinking about the next bet. They may be at work, but checking scores. They may be lying in bed, calculating how much they need to recover. Their mind becomes occupied by gambling even when they're not playing. That's when gambling stops being an activity and becomes a psychological environment. The person begins organizing life around gambling, and once that happens, telling them simply, just stop, may not be enough, because the behavior is no longer driven by a simple desire to make money. It can be driven by anxiety, excitement, shame, regret, hope, and the need to escape negative emotions. The person may gamble when they're happy. They may gamble when they're stressed. They may gamble after a loss because they want to recover. They may gamble after a win because they want to experience the excitement again. Eventually, almost any emotional state can become a trigger. This is why understanding gambling requires more than understanding mathematics. You have to understand human psychology. There are several stages that can help us recognize the progression. The first stage is experimentation. Gambling is occasional. The amounts are relatively small. The person sees it as entertainment and generally maintains control. The second stage is escalation. Wins become emotionally important. The person starts gambling more frequently or increasing the amount of money involved. They begin thinking about gambling even when they're not playing. The third stage is chasing. Losses become the reason for continued gambling. The person starts trying to recover previous losses. The bets increase. Rational financial boundaries become weaker. The fourth stage is collapse. Gambling begins affecting savings, debt, relationships, work, and personal stability. The person may borrow money, hide losses, sell assets, or make increasingly desperate decisions. Not everyone follows exactly the same path, and gambling problems can develop differently from person to person. But the pattern is important because recognizing the warning signs early can make a huge difference. One of the earliest warning signs is not necessarily losing a huge amount of money. It can be thinking about gambling more often than you used to. Another warning sign is increasing the amount of money because smaller bets no longer feel exciting. Another is feeling irritated when you cannot gamble. Another is trying to win back losses. Another is hiding how much you gamble. Another is borrowing money for gambling. Another is repeatedly promising to stop and then returning to it. The earlier these signs are recognized, the easier it is to change direction. But there is another question we need to ask. Why does the brain respond so strongly to gambling? One reason is variable rewards. When you know exactly what you're going to receive every time, the brain quickly becomes accustomed to it. But when the reward is unpredictable, anticipation can become much stronger. Sometimes you win, sometimes you lose. Sometimes you get a big result, sometimes nothing happens. That uncertainty can create powerful anticipation, and anticipation itself can become addictive. You may notice that the most exciting moment isn't always the moment after winning. Sometimes it's the moment just before the result. The possibility of winning creates a rush. Your mind starts imagining what you could do with the money. You picture paying off debt, buying a car, buying a house, quitting your job, changing your life. The fantasy becomes part of the reward, and that's why gambling can be so difficult to resist. You're not just betting money, you're betting on a different version of your future. For someone struggling financially, that fantasy can become especially powerful. If you earn a modest salary and have little savings, the idea of suddenly winning a life-changing amount of money can feel like an escape from years of hard work. Instead of slowly building wealth, you imagine jumping directly to the finish line. But here's the problem. The probability of a life-changing win may be extremely small, while the probability of repeatedly losing smaller amounts can be very real. And even if you do win, a person who has developed unhealthy gambling behavior may simply continue playing until the winnings disappear. That's another critical lesson. The problem isn't always the size of the first loss. Sometimes the problem is the inability to stop after a win. Imagine someone turns $500 into $5,000. They could walk away with a huge return relative to what they started with. But instead they think, if I can do this again, maybe I can turn it into $50,000. They keep playing. Eventually, the winnings disappear. Now they aren't thinking about the original $500. They're thinking about the $5,000 they once had. The psychological loss feels much larger than the original investment. This is one of the strangest aspects of gambling. A person can lose money they never had, emotionally speaking, because they become attached to temporary winnings. They start grieving money that was never truly theirs. That's why a lucky win can sometimes be more dangerous than an early loss. A loss can teach someone to stop. A big win can teach someone to continue. Now, think about the financial opportunity cost. Every dollar placed into a gambling session is a dollar that cannot be used somewhere else. It could have paid down expensive debt. It could have built an emergency fund. It could have purchased education. It could have been invested. It could have been used to start a business. It could have simply remained available for future opportunities. The real cost of gambling is therefore not only what you lose at the table, it's also what that money could have become somewhere else. This is one of the most important ideas in personal finance: opportunity cost. If you spend money today, you're not only giving up that money, you're giving up everything that money could potentially become in the future. And this becomes even more significant over decades because of compounding. A small amount invested consistently can grow over time. A small amount lost repeatedly to gambling compounds in the opposite direction. Instead of creating future value, it destroys future options. Imagine two people earn the same income. One consistently invests a portion of every paycheck. The other repeatedly spends part of their income gambling. After many years, the difference isn't simply the amount gambled away. The difference includes the investment growth that never happened. That's the hidden financial cost. Gambling can steal the future without making the loss obvious today. And this is where the money decoded philosophy becomes important. Real wealth isn't about finding shortcuts. Real wealth is about understanding systems. Income is a system. Saving is a system. Investing is a system. Risk management is a system. Compounding is a system. Gambling is also a system, but it is a system designed so that the house generally has an advantage over the player. If you understand that, the decision becomes much clearer. You don't need to hate gambling. You don't need to believe every casino is evil. You don't even need to believe that every person who gambles will become addicted. You simply need to understand the economics and the psychology. If you choose to participate, understand that entertainment has a price and that the money should be treated as money you are willing to lose completely. The moment you start needing the activity to produce income, recover losses, pay bills, or change your financial life, you're no longer treating it as entertainment. You're taking a financial risk that can become destructive. And if someone already feels unable to stop, the solution isn't another betting strategy. It's distance from gambling, financial protection, accountability, and professional support when necessary. Because once gambling becomes compulsive, trying to win one final time is often exactly what keeps the cycle alive. There is also a lesson here about the way we think about wealth. Society constantly shows us stories of people who became rich quickly. We see lottery winners. We see traders making enormous returns. We see entrepreneurs becoming billionaires. We see people posting screenshots of huge gains. What we don't see as often are the thousands of people who took similar risks and quietly lost money. This creates survivorship bias. We see the winners because winners have a story. The people who lost money usually don't create inspirational videos about it. The same thing happens with gambling. You remember the person who won a fortune. You don't remember the thousands of people who lost quietly. You remember the spectacular jackpot. You don't remember the countless ordinary losses that funded the business. And this is why financial education matters. If you don't understand probability, incentives, risk, and psychology, you can easily confuse a lucky outcome with a good strategy. Those are not the same thing. A good strategy can produce a bad result sometimes. A bad strategy can produce a good result sometimes. The difference becomes visible only over time. That's why building wealth requires patience. You don't need to win every day. You need a process that survives bad days. You need a process that protects you from catastrophic mistakes. And gambling often does the opposite. It concentrates risk into short periods and encourages emotional decisions. Now let's return to the casino. Imagine a casino that loses money on a particular player tonight. Does that mean the casino's business model has failed? Not necessarily. The casino expects variation. Some customers win, some lose. Some leave quickly, some stay longer. The business survives because the overall mathematical structure works in its favor across a large number of transactions. This is a crucial concept. The casino doesn't need certainty about every individual outcome. It needs an advantage across the system. And you should think about your own finances the same way. You don't need every investment to succeed. You need your overall financial system to be resilient. You can have losing investments. You can have bad business years. You can make mistakes. But if your risk management is strong, one mistake doesn't destroy everything. That's what separates investing from reckless speculation. The goal isn't to eliminate uncertainty. The goal is to survive uncertainty. And perhaps this is the deepest lesson hidden inside gambling. People often want certainty about the future. They want to know which stock will rise, which business will succeed, which investment will make them rich, which number will win. But nobody knows the future with certainty. The difference is how you respond to uncertainty. A gambler responds by risking more in pursuit of a favorable outcome. A disciplined investor responds by managing risk, diversifying appropriately, studying fundamentals, controlling emotions, and allowing time to work. One tries to force the future, the other prepares for it. That difference may determine whether money becomes a tool or a trap. So let's go back to the person who says, I'll just gamble for fun. Maybe they really can. Maybe they set a small entertainment budget, never borrow money, never chase losses, never increase bets because they're losing, and walk away without emotional difficulty. For that person, the activity may remain entertainment, but the moment any of these boundaries disappear, the risk changes. If you gamble with money you need for rent, that's different. If you borrow money to gamble, that's different. If you hide your gambling from your family, that's different. If you think about gambling throughout the day, that's different. If you feel that you must win back previous losses, that's different. If you repeatedly promise yourself to stop, but cannot, that's a serious warning sign. And at that point, the smartest financial decision isn't to find a better game, it's to stop playing. Because the greatest victory in gambling isn't winning a large amount of money, it's refusing to let the game control your financial life. There's a powerful sentence that captures the entire lesson. If you don't play, you can't lose at the casino. It sounds almost too simple, but sometimes the simplest financial principles are the most powerful. You don't need to beat every system. You don't need to prove that you're smarter than the house. You don't need to recover every dollar you've ever lost. You don't need to take one final risk to change your life. You can simply walk away. And walking away doesn't mean you're weak. It can mean you finally understand the game. Because the casino's greatest advantage isn't just mathematics. It's the human belief that the next outcome will be different. The next hand, the next spin, the next game, the next bet. And as long as you believe the next outcome will finally fix everything, you keep giving the system another opportunity to take your money. That's the trap. The person who wants to become wealthy should learn to recognize it. Because financial freedom is not about finding a machine that can turn a small amount of money into a fortune overnight. It's about creating a system where your money has a chance to grow while you sleep. It's about building valuable skills, increasing your income, living below your means, avoiding destructive debt, investing patiently, protecting your downside, and giving compounding enough time to work. That path may feel boring compared with the excitement of a casino, but boring can be incredibly powerful. A quiet investment account growing year after year may never give you the adrenaline of a jackpot, but it can give you something much more valuable: control over your future. And that's ultimately what money should provide. Not excitement, not status, not the illusion that you're one lucky decision away from becoming rich. Money should provide options: the ability to leave a bad job, the ability to handle an emergency, the ability to support your family, the ability to invest in yourself, the ability to choose how you spend your time. That is what financial freedom really means. So the next time you see someone celebrating a huge gambling win, remember that you're seeing only one moment. You don't know what happened before. You don't know what happened afterward. You don't know how much was lost trying to create that win. You don't know whether the person walked away or continued. And you certainly shouldn't confuse a lucky outcome with a reliable financial strategy. The same principle applies to social media. Don't compare your slow financial progress with someone's spectacular highlight. Building wealth can look incredibly boring from the outside. You work, you save, you invest, you wait, you repeat. Years pass. Then one day you realize that the boring decisions created something powerful. Your money began producing money. Your investments began producing income. Your skills increased your earning power. Your financial mistakes became lessons instead of disasters. And most importantly, you no longer needed luck to feel secure. That's the difference between chasing wealth and building wealth. Chasing wealth asks, how can I get rich quickly? Building wealth asks, what system can I follow for the next decade? Those questions lead to completely different lives. So if you remember only a few things from this video, remember these. The casino doesn't need to win every hand. The house edge becomes powerful through repetition. A lucky win can create false confidence. Losses can trigger the desire to chase. Chasing losses can turn a small problem into a financial crisis. Wealth doesn't make someone immune to gambling psychology. And the money you gamble isn't only money you could lose today, it's also future opportunities you may never get to build. Most importantly, don't build your financial future around luck. Build it around decisions you can control. Earn more, save consistently, invest intelligently, manage risk, protect your future, and let time do what gambling promises to do instantly but rarely can: create wealth. Because the real secret to financial freedom isn't finding a way to beat the odds. It's understanding the odds well enough to know which games you should never play. This is Money Decoded. We decode the psychology, systems, and hidden forces behind money so you can make better financial decisions and build real wealth over time. If you found this video useful, subscribe to Money Decoded and join us for more videos about money, wealth, investing, financial psychology, and the decisions that can quietly determine your financial future. Because the better you understand money, the harder it becomes for money to control you.